So once again, Palantir is in another downtrend, but Wall Street seems to be saying something a little bit different here. What exactly is Wall Street saying? What are the charts saying? And more importantly, how does this all affect you as a Palantir shareholder? And of course, we all want to know where Palantir is going next. Well, let's discuss all that today, guys. I'll get you some real answers on where Palantir is going, what the Wall Streeters are seeing, and we'll kind of piece it all together. Just make sure you like the video if you like getting the truth without the hype. All right, so we're going to pull up a video here with a bunch of Wall Street guys, or a couple of Wall Street guys that do a bunch of charts and a bunch of other pretty graphs and all that sort of stuff. And although I'm not necessarily the biggest believer in technical analysis being the only indicator, of course, you guys know I believe in fundamental analysis. More importantly, are you overpaying or underpaying for Palantir? That right there is the important piece for me. At least it will give us an insight into what Wall Street's thinking, where their mindset is, and kind of where they're looking at, so we can appropriately kind of assess what we need to do from here with Palantir. So we'll discuss that along with where I see Palantir going next. All right, so let's jump into the video here.
Welcome back to Trading 360. I'm Nicole Petalides, live at the New York Stock Exchange. It's time for the big three. 3 stocks, 3 charts, 3 trades. Ben Lichtenstein will take us through the charts. Here to take us through the trades, Joe Tagay, portfolio manager of the Rational Equity Armor Fund. Great to see you both on this Tuesday. So we're seeing some new highs, right? Tech's doing great. Nvidia's a new high. Joe, tell me a little bit about your big picture thoughts on how the markets could act in the next few months.
Yeah, it's great to be here. Thanks for having me. And we're seeing new highs. The market has really turned around ever since Powell basically said we're going to get some cuts this year. The market's been in love with that. Now, remember, when the Fed does cut, I usually think historically that's going to be bad for the stock market. But in the meantime, while the Fed is flat, that can be quite good. We still have a strong economy, and it's fascinating to see this leadership continue from the AI Nvidia last week. Just fantastic news for the stock market in general. Today, we're getting semiconductors leading again. So I think that's more good news. But we have a dull market. I think there's an adage, don't sell a dull market. I think for the next few months, we should be in tune for a melt up.
I always love it when these guys use terms like melt up and silly stuff like that. More importantly, what we're seeing was Nvidia obviously leading the way in regards to earnings, having another yet a blowout earnings call there, which of course is positive overall. Of course, their commentary was positive. There was basically everything about that earnings call was really positive. So anyways, just more silly stuff there from Wall Street. But as you can kind of see, there isn't really anything they're seeing on the horizon that's going to change anything in the short term here that we should be necessarily worried about or anything else like that, despite the fact I know there's some doom and gloomers out there, but they kind of seem to be always doom and gloomers now for, basically more than a year now, a year and a half or so, and they've been consistently wrong so far. So we'll keep it rolling here.
That's true. They always say don't short a dull market. So that being said, I mean, we're looking at Palantir. That's the first name on your chart here. And 1 year, it's done well, but it really sort of was trading in somewhat of a range the first part, and then February moved higher, and then has been in a new range. Some of your thoughts about why this, where this could be headed, and why?
Yeah, so we talked about the AI trade. The hardware names have been the first leaders in it. The NVIDIAs of the world have just taken off and taken the world by storm. I think the next wave is going to be the software names. This is a name I've been following for a while. You know, it's had a fantastic year. If you look at a big picture, up from 16 and a quarter to start the year to over 20 where we are now. That's not too shabby. You know, that said, we were at a high of 27 plus. We've come off of that since then. So it's been challenging. It's been consolidating here, but I still think it's a fantastic long-term hold. You go back and look at last.
Right then and there, you kind of see fantastic long-term hold. That was not what they were saying just a few months ago here at the beginning of the year. Obviously, clearly they have proven otherwise. I think people are just, as they come around to Palantir more, as it gains more momentum, more and more Wall Street folks are coming around to it. But when you start hearing consistent commentary that's positive towards a stock that in the past have been extremely negative towards that stock, it kind of means Wall Street is starting to come around to your stock, not just because it's the hot trade or whatever the case is, but actually due to those fundamental reasons that we actually care about as investors ourselves. And we have seen a big run up there in the stock. Obviously, you see it kind of trailing off there on the chart. But nonetheless, it still is very, very important to hear Wall Street starting to get on board slowly and surely with this particular stock, and not just pointing out it's the hot AI trade, AI is hot right now, or whatever the case is, actually pointing towards some fundamental things showing up, and of course some things actually showing up in the charts as well to further support the price action.
We were kind of in a channel, maybe 16 to 20, broke out of that channel, and now we've been consolidating after that first quarter earnings here above 20. I think that's fine for the long-term story of this stock. I'm happy as long as it's still above 20. I think this is a buying opportunity now that it's come back down to this lower end of the range.
Yeah, I won't argue there. That's the reason why it kind of came back onto my watch list there. If you guys missed that video, I put it up here. But nonetheless, that's why it came back onto my range, back onto my watch list, because I really just think, well, not necessarily we're getting the cheapest shares. Obviously, it was cheaper at the beginning of the year than it is right now, but we are starting to kind of fit into that consolidation pattern and kind of the lower end of that consolidation pattern. So obviously, if it breaks out and goes too high, obviously to me, it would be overvalued. You guys know I had it in the mid 20s by the end of the year here. So obviously it would get itself that way, but I understand share count is what's most important. And right now we're getting shares what I feel like are on the cheaper end of that band for now if we're able to hold that $20 line. But let's see what else the Wall Street guys have to say.
Buying opportunity. Let's hear what Ben has to say about the charts, please. Ben, good morning.
Nicole, good morning. It has been a bit of a challenge, as Joe pointed out, and we have been consolidating in shares of PLTR since that first quarter earnings result. I think that's a pretty good place to begin our look at price activity, the sell-off we saw in reaction to the news, the quarterly results, and then the sideways consolidation that's been playing out. You can see, again, for the most part, high conviction on the left side of the screen, sideways balance, which has formed since. So really no rejection to this lower level. I've got a 30-minute candle chart queued up here, and you can see that area that we're forming here is right around 2130. So well-defined upper, well-defined lower extreme to keep an eye on throughout the week to see if we break out of this range. But this is a bit of a bearish pattern. But as you take a step back, look at the longer-term chart, you're going to see a bit of a bullish pattern playing out, testing a lower extreme of a range that we're currently in. Again, this chart...
That right there perfectly illustrates why I don't listen to traders, because depending upon the narrative you want to push, I can show you a very bearish chart, and even more than he just showed, and I can show you a very bullish chart as well in most cases, not in every case, but in a lot of cases I can do that there. And that's why, you know, it's just basically for traders. Long-term buy and hold investors, that's why valuation matters so much. So many folks fall for the charts because they're pretty and you feel like, gosh, this guy's got to know what he's talking about because he's pulled up all these pretty charts and he showed you all these pretty lines and graphs and moving averages and, you know, all kinds of, you know, fancy lines with names that nobody can pronounce and nobody can spell. You know, cool. But overvalued is overvalued, undervalued is undervalued, and I don't need any of that in order to tell that there. Again, it can tell you what to do, maybe from a trading standpoint, maybe what the traders are going to do, maybe what Wall Street's thinking a little bit here. But in regards to that, you know, you can just sit there and contradict yourself all day long and you know, basically have a whole list of bear points and charts and a whole list of bull points and charts, and you end up in the same spot in the end of just trying to guess. And that's why traders lose out over the long run to just people who simply DCA and don't bother with any of this sort of stuff.
Goes all the way back to, as Joe was pointing to, some of the price activity we saw to begin the year, the rally up 15, 16, all the way up to just shy of that 28, 29 level. And then, again, areas of value that are moving higher and higher. So currently in balance around 24. The bulls don't want to see us take out 17. That would kind of bring that working assumption that we're seeking value at higher and higher levels into question. What the bulls do want to see is a breakout up and through this $28, $29, $30 level, and then consolidation at a new upper level. So a continuation of this pattern. I wanted to show you where we are relative to the 50, the 200-day moving average, and how well you can see we're holding above both, right? Still kind of in a bit of a range, though, and retesting that gap that we saw that broke out through that $20 level. RSI not really providing lean one way or the other, but yeah, in the longer term, I see a bit of a bullish pattern. Short term, not what the bulls are looking for, but I think it's tough to get too excited if you're bearish on this one right now.
So all that to say, it's right now harder to be a bear than a bull, basically meaning the momentum is in Palantir's direction. And that really, you know, just kind of shows you how useless these charts are in a lot of different ways. So even the Wall Street guys are saying, hey, yeah, it's tough to be bullish or bearish on this stock. Excuse me, tough to be bearish on this stock. That doesn't mean it's going to $40 or anything crazy, and I'm sure the pumpers will be out there pumping stuff soon enough if they aren't already. But it does mean that we are in the right, you know, basically the right trajectory for the stock, even according to the Wall Street guys.
Okay, so final thoughts, Joe, right? You can't get too bearish on this one, folks. Go ahead.
Yeah, so this is a perfect example. We see the volatility in the name. I want to play it with option. I'll be looking at September. I talked about my narrative. I think we're in for a melt up until when the Fed starts cutting interest rates. I think they're going to be cutting in September. I want to be long stocks. I want to be long risky names. Until then, Palantir, perfect name to play it with options. I'm worried if we get below 20 here to the downside, but as long as we're above 20 Palantir, I'll be looking to the upside, looking at the September 22 calls. They're $2 for me to get into. I think that's a fine risk reward. It could get back up to 27 or higher before September.
Okay, so there you go. He kind of gives you a few little option plays looking to play, although I found it kind of curious that he was, hey, I'd rather be in stocks whenever the Fed starts to cut rates. I don't know. Was he kind of, or wanted to be long stocks? He's kind of implying once the Fed starts cutting, stocks are going to go down. I don't know. Again, the Wall Street narrative changes every week. We need Fed in order to cut rates in order for stocks to continue to run. Now, I don't know. This is why I don't get into any of those games or anything else with Wall Street. Now, they just don't make any sense. They're going to speak out of both ends of their mouth, and it just depends on what trade each guy has on at the time and all that good stuff like that. But as you can tell, these guys are coming around to the bullish side. Now, for different reasons, there's different things that they're using to kind of create that narrative or to create that sense of where Palantir is going. But it's good news for us as shareholders. Now, for me, where is Palantir going in the short term? I've always told you guys, I have no freaking clue. Warren Buffett says he has no clue where stocks are going in the short term. I really don't know either. What I can tell you is, I can tell you Palantir has continued to execute on earnings, quarter in and quarter out. And once again, after this last earnings where everything was great in my eyes in regards to, I listened to the call, I went through all the numbers, I didn't watch any of the reaction videos or anything else, so I have no idea what anybody else said, and I honestly don't care what anybody else is saying or doing. For me, whenever I read all that, I went, wow, okay, still like exactly what I want to see. And then I saw Wall Street sell it off. Obviously, it ran up big into earnings. I saw Wall Street sell it off, and I went, oh, okay, let's ask the chart master there, where's the bottom of the chart at? Hey, looks like we're going to maybe get down to the bottom of that chart there. I understand that share count is what matters in the end in regards to the stock market, and owning great stocks. For instance, you don't get the returns that I've seen on Apple over the years by just buying one lot of shares, 20 years ago and just holding them all the way through. Obviously, that's part of the strategy, but the number I've gained is so much larger because I added all the time, every time it got undervalued. I will never buy a share of Apple stock again where it is not an average up. And that's okay. Every single share of Palantir that I buy probably from here until, the end of time, unless it gets down under $10 again, is going to be an average up. And that's okay, guys. Share count is what matters in the end. Palantir continues to execute, and I'm getting a chance to add some shares at a reasonable price. And I understand if it breaks 20, it could very well run down to that 17 line that he showed or whatever. Okay, cool. I'll buy some more shares at 17. It's not that big of a deal over the long run. If Palantir becomes a $50, $80, $100 stock, or some of the folks out there have 500. I have no idea how you get there, but let's just pretend like it goes up to $500. Are you really going to care that you bought at $20, $21 and it went down to 17? So I should just sell out and try to rebuy, but then it ran up on you, so then you didn't buy again. No, you're not going to freaking care less whether or not your average is, under $10 like mine is, or up over, $20, $25. If it reaches that number, it's not going to matter in the end. The number that's going to matter the most is your share count. That is what's going to matter in regards to where the stock goes long term. So when I view where Palantir is going, I don't know where it's going in the short term. I do think we're in the band there. We're at the lower end of that band, which probably means it looks good from a setup perspective. And the Wall Street guys agree with me as well. So I can, not that I take any comfort in having the Wall Street guys agree with me. They usually disagree with me a lot. They disagreed with buying Palantir at $6. They disagreed with buying it at $7, at $9, all that other stuff like that. But hey, nonetheless, sometimes you line up with them, sometimes you don't. I just wanted to kind of show you guys that not only are the charts starting to look more bullish than negative, but also the narrative around it is starting to me, become more fundamental. They're starting to talk about other things other than just AI hype. Oh, it's an AI name, it's a hot name in AI, all that good stuff like that. That they're getting away from that narrative, which I enjoy, which is what I want to see as a Palantir shareholder. So you guys know, I added it to my watch list. I'm just executing a simple DCA on it, and I'll just continue to move forward with that DCA as we go along because I want to continue to get that share count up, and I felt like this was a good opportunity for me to do it, especially with the plan for the rest of my stocks and everything else. Which if you want to see that complete watch list with price targets, see my complete plan for all my stocks, see all my buy and sell alerts in real time, be a part of the $250 portfolio challenge, and so much more, guys. Make sure you check out the pinned comment down there for a membership. I got 2 different tiers there. So make sure you check out which one you like and see if a membership's right for you and which one fits you the best. And click this video here if you want to see exactly what I'm buying in this market. And click here to see my exact plan for this market. So thanks for watching, and we'll see you in the next one.